A lot of small businesses are going to incur startup expenses and initial type expenses because they need to go out and buy equipment. Maybe they need to go out and buy furniture for their office. Maybe they need to go out and buy a new laptop, a new tablet, a new desktop, a printer, fax machine, whatever. These are all called capital purchases. And the reason that they're capital purchases or capital assets is because their useful life is going to last more than 1 year, or hopefully last more than 1 year. And so unfortunately, the tax law requires us to depreciate these items over 5 or 7 or maybe even a longer period of time rather than taking the expense up front. And one of the tax planning opportunities that we have as business owners is that we can make an election to have these taxed as an expense all in the first year. Or we can claim what's called bonus depreciation, which also gives us a really big upfront tax deduction. But again, these are some of the tax law rules that you are going to need to be familiar with, or at least hopefully your CPA or tax attorney will be familiar with, so that instead of depreciating a desk over 5 years, you can now take all of the expense in the first year, or maybe half of the expense in the first year with bonus depreciation. Unfortunately, this law changes quite a bit, so you're going to need to check out the IRS website or come back to the Tax Organizer app to be able to see what the current law is. But understanding what you can do with equipment purchases is going to go a long ways in reducing your overall tax bill. I found the Tax Organizer app to be very important for a lot of my clients. It helps them keep their records together, keeps them organized, and that's why we're making the Tax Organizer app available for you as a free download. All you need to do is click below and try it out for yourself. You have nothing to lose.